How the macro landscape is shaping Bitcoin markets. The latest legal challenges around the Bitcoin white paper. A barrage of institutional Bitcoin news. What the S&P 500 hitting all-time highs has to do with the crypto markets. For those worried there was a loss of momentum around institutions entering Bitcoin, fear not. Morgan Stanley has bought more than 28,000 shares of the Grayscale Bitcoin Trust. More broadly, markets have been buoyant over the last few weeks, closing at new all-time highs on Monday. If it did, what would the likely impact on Bitcoin and other cryptos be? It is Tuesday, June 22nd, and today we are talking about how the macro landscape is shaping Bitcoin markets. Basically, Craig Wright's latest delusions of grandeur involve running around trying to sue everyone who has the Bitcoin white paper on their website for copyright infringement. I think the whole thing is disgusting, but Cobra said it better than I could. So I'll just read his other statement about this. All your fiat-based assets are ultimately secured by the same legal system that today made it illegal for me to host the Bitcoin white paper because a notorious liar swore before a judge that he's Satoshi. I don't think you could get a better advertisement of why Bitcoin is necessary than what happened today. If you were concerned that the steady push of traditional finance into the crypto sphere was drying up, today's barrage of news should make you feel much, much better. The Deutsche Börse Group, a German exchange operator, has spent hundreds of millions of Swiss francs to take a two-thirds majority stake in Crypto Finance AG. Crypto Finance AG is a regulated Swiss platform for crypto trading, storage and investment, and here's what they had to say about the deal. Digital assets will transform the financial industry. They've launched two funds with NIDIG and FS investments available for their wealth management clients to get exposure to Bitcoin. They also updated policies to allow a group of their funds to invest directly in Bitcoin through cash-settled futures and through the Grayscale Bitcoin Trust. If you thought that Cathie Wood, one of the first champions of Bitcoin on Wall Street, the absolute emperor of innovation ETFs, was going to sit back and allow all the rest of the jokers to have all the fun with their Bitcoin ETF applications, you are absolutely nuts. ARK has joined the great game for a Bitcoin ETF. They're partnering with 21 Shares, who built an array of exchange-traded products for crypto, primarily in Europe. Of course, when it comes to a Bitcoin ETF, the SEC keeps delaying and frankly, the betting on an ETF being approved this year has sort of gone down. Finally, however, let's get to our title topic, how the macro landscape is shaping Bitcoin markets. If you're a regular listener, you know that I made the argument a few different times that the biggest thing putting downward pressure on the markets has been broader macro insecurity versus specific FUD. I think the environmental FUD has been particularly resonant in the context of ESG investing taking such a bigger seat at the table. I also think that it's impossible to look at how markets have reacted to China news and not see that as a major driver. Still, my argument has been, and is, that effectively the wind in crypto sails over the past year, with the abundance of cheap money flooding into markets that propelled everything up, and in so doing propelled traditional investors farther out on the risk curve in an endless hunt for yield that was backstopped by Fed support. And while the Fed, for a while, kept insisting that this inflation was nothing but transitory, they're now starting to walk that back, saying that it's at least time to begin talking about what it would look like to taper Fed support for the economy. So, as Fed support has looked less assured for markets, it has hit many of the things that did so well over the last year, particularly those risky assets like tech stocks, and yes, crypto. Despite the fact that many of these Wall Street investors do have conviction around Bitcoin's long-term inflation hedge properties, simply by virtue of its mathematical pre-programmed unchangeable monetary policy and fixed supply, short-term that doesn't mean they're not going to treat it like a risk asset. If you look at, for example, an ARK Innovation ETF chart versus a Bitcoin chart. On Monday, both the S&P 500 and Nasdaq closed at all-time highs. That sea of green has flowed into crypto today as well. Now, I think it would be way overstating the case to say that crypto markets are now totally correlated to the stock market. It's that, as Wall Street and traditional finance more deeply intermingle with crypto, there's going to be more correlation, particularly when it comes to how investors feel about the overarching macro state of the markets. Right now, for better or worse, The biggest factor in that overarching macro state of the markets is what central bank support looks like. Speaking of which, there's another X factor that's worth noting in those markets.